Good morning, good afternoon, and welcome to ZEAL's Q3 number presentation. In this presentation, I will cover the following topics. I will start off with a summary of the first 9 months. I will then give a financial update. This section will be followed by one of our updated guidance for the year before I'm rounding off with the key takes away. Our environment has changed. The corona pandemic has become less of a factor as most countries, including Germany, have lifted their lockdowns. Instead, a weak jackpot environment has characterized the last quarter and most of the year to date. This has a direct effect on billings that we make with our existing customers. But a weak jackpot situation also impacts our customer acquisition. We manage the efficiency of our customers' acquisition very carefully. Therefore, we dial up marketing spend in good jackpot environments and dial it down in low jackpot environments. Longer term, as jackpots is simply a function of statistic, this does not really make a difference, but short term it does. Despite the jackpot environment, billings and revenues have increased in the first quarters of this year. We have significantly improved our profitability, which is a result of our efficiency and optimized marketing approach and our strict cost control, and of course the synergies we created with the merger of LOTTO24 and ZEAL. Other highlights include a successful delisting of LOTTO24 to reduce complexity and associated costs. We've also run a vaccination lottery to support the vaccination campaign of the government. And we had a record winner. A ZEAL customer won almost 50 million euros. What a win. And we adjusted our guidance based on the trends that I've just explained. And I will go more into details later in the presentation. Let's talk about the regulatory situation. The new gambling state treaty took effect on July 1st this year. It will run at least to 2028. And we see some new business opportunities, some exciting opportunities for us in games and potentially also sports betting. The opportunity we are focused on right now is to launch games. We will offer games to our customer that are tailored to our lottery players target group. We know from experience, but also from international lottery market, that this is a good opportunity for us. We are only waiting for a license to be issued. Authorities has recently come out with a statement that give us some guidance. They may issue the first permits in Q4 this year, but certainly issue the first one in the first quarter of next year. Finally, we will apply for an extension of the brokerage permit. This will be a straightforward process or exercise. Let's now move to the financial section that you will find on page 6. Before I actually dive into the real financials, let me first share some insight of the jackpot developments, which I think is important, but also a good scene setter for the actual numbers. What you see on this slide is the average jackpot versus last year in the two graphs. On the top one, you see 6 out of 49, and on the bottom one is EuroJackpot. What one can read from the slide is that the average jackpot in the case of 6 out of 49 is only marginally lower than last year, while for EuroJackpot has a 6 million lower gap. This adverse variance is indeed important, but it's not the main driver. The main driver is in fact the peak jackpot. And what is interesting is that in 2020, meaning last year, we had 9 real peaks, while for this year, we only had 3. And it's in the peaks we have the buzz in the market, and people get more excited and want to be part of a draw. Some customers are just waiting for the peaks to happen. So you clearly see the correlation and why it's so important to have those peaks. What does it mean to us? A high jackpot is attracting new customer, and acquisition becomes much easier with increased volumes as an outcome. And that, of course, leads to future growth rates. And the old customer, but also the new ones, they start to spend more in those weeks, while our billings or transaction volumes increases as a result. The opposite is true for low jackpots. And the final remark, is that investing in less customer acquisition, I mean marketing, when the jackpot is low, we'll see low numbers of new customers, but the low spend is also at the same time bumping up the profitability for the period. Let's now go into slide 7, where you find a condensed income statement. Revenues are up 1% versus last year, and this is despite in comparison terrible jackpot situation this year. Staff costs fell by close to 13%, or fell by 2.1 million, and that was driven by two factors. Firstly, we have slightly fewer people, and secondly, the reevaluation of the long-term incentive plan that we match with the current share price. The latter is the major driver for the decrease. And we continue to invest in customer acquisition, but temporarily on a much lower scale. This is important to understand. We just don't invest the same amount every month, but instead always optimizing the amount and the channels depending on the circumstance to have the maximum efficiency. This has led to few customers, but still customer very high lifetime value. And we will continue increasing the marketing investment when the situation is more favorable again and dial up this marketing investment. All this demonstrates the underlying profitability of the model. Once the investments are more moderate, we gain more profits. Regarding direct operating expenses, this is mostly driven by the higher transaction volume that went up 5%. So you can see this as our variable cost. Indirect operating cost has been reduced by more than 3 million due to savings in service provider, external staff members, and also some release of early made provisions. All this has led to adjusted EBITDA, which has literally gone through the roof with 156% increase and now at 17.7 million euros. Net profit after tax are at 7.3 million. Also, this is a very solid number. In comparison to last year, we have reversed interest income this year for the pending VAT case, but also have a more normal tax charge. Let me now give you a bit more insight on some of the KPIs that you will find on the following slide, slide 8 to 10. As I said before, our billings grew by 5% to 493 million, which I'm satisfied with considering this jackpot situation that we have experienced this year. We have not met the double-digit growth that is our aim, but looking at history, it seems like we're having great jackpot years every other year, like we had in 2018 and 2020, but followed by weak jackpot years in 2019 and also this year. Gross margin is telling us how much we keep, or what turns into revenue is in line with last year, or 12.2% for the 9 months. As I explained before, we believe it's going to normalize around this year for the coming months. Our gross margin also have a strong correlation to jackpot situation, since we're able to sell more high margin or premium products that normally drive up the margins when the jackpot is high. In other words, margin tends to be higher when the environment is favorable and the other way around when jackpot is low, like for this year. On slide 9, we have highlighted net cash and new registered customers. Net cash is now at 65 million euros, up 13%, mostly thanks to the earnings we have made in the year. And just to call out that if you're purely looking at our cash situation, this is a bit misleading this quarter, since we received 49 million euros for this big winner from the state lottery just before the month end, but we paid it to the lucky winner in the beginning of October. And you can see this liability in other financial liabilities in our balance sheet. So not impacting net cash, but the pure cash position is inflated for just this reason. As I said to you before, even if we are confident to ultimately win the VAT case, we have indicated that the remaining exposure for this VAT case is approximately 23 million. And also in line with the High Court ruling, we have reduced the interest income that we are booking from the 6% to now estimated 3%, which corresponds to 2 million adverse impact on our profit and loss statement for the period. Let's now talk about acquisition of new customers. We continue to invest in marketing, but temporarily and deliberately at a lower level to match the current jackpot situation. This has led to fewer, but still close to 450,000 new registered customers. This is not the level we want it to be, and we're always exploring new channels, but the main driver is the jackpot situation, especially if you compare with last year. As I said, a key activity for management is to scale up and down marketing and use different channels mix for every unique situation to create the maximum value for our marketing investment. And this, of course, has a significant impact on current year's profitability. On slide 10, you will find some further performance indicators. The cost per lead, or CPL, is at last year's level at 27.6 euros per newly registered customer. This low level has been supported by the vaccination campaign when we got a lot of free customers. So this explained the drop from last quarter where we have a more normal CPL level. We're also seeing an increase in Google and Facebook related acquisition costs. Therefore, I expect this to drive up their CPL as soon as we increase our investments again. But just to repeat what I said before, the customer we acquire in low jackpot situations are often more loyal, and the value these customer brings is typically higher since we acquire customers that really want to play the lottery and not only jackpot hunters. If you then look at return on investment of these new customers, it's still very high number. So what I said last year that CPL is an indicator, not a guided metric, still holds true. Monthly active user is just shy of 1 million. And I expect this to be ticking up once we get more favorable jackpot situation and more customers start to engage or becoming more active. Average billing per user is still very high at 56 euros per month, which indicates that the customers that do play spend a lot every month, but also, of course, supported by the price increase that we had in 6 out of 49 last year. Let's now talk about the outlook for the financial year, and you will find that on slide 12. As you probably saw from our announcement, we changed the guidance in light of this jackpot situation that we in the short term won't reach the very aggressive top line numbers, but thanks to strict cost control and the lower marketing spend, we've actually increased the EBITDA guidance. And the new guidance is billings of around 650 million, revenues of around 86 million euros, and adjusted EBITDA of around 25 million euros. All this is based on an average jackpot for the remaining 2 months with an average marketing investments. On slide 13, we will talk about the expected dividend payments and showing in the bar chart how the dividends have developed over time. As you can see, we have increased the last year dividends by more than 10% every year, and we aim for another 11% increase in 2022, leading to €1 per share already next year. All this would be the equivalent that we will return 22 million euros to our shareholder next year. So let me finish off by summarizing the first 9 months. We have continued to grow despite a weak jackpot environment. As a result, from our strict cost control and the temporary savings in marketing, our profitability has been significantly increased. The withdrawal of LOTTO 24 from the stock exchange was very successful, and we always adapt our marketing approach to reflect the current reality and to optimize the returns we make. This concludes my presentation. Thank you very much.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at ZEAL 11A, can make a company video with and about you, please email us at content@zeal11a.com.